Hey folks, welcome to episode 45 of Long Shots, our weekly podcast, where we basically do a banter on business and finance. That's the usual drill. And every once in a while, we get the opportunity to host a special guest from the world of business and finance to figure out what their work is, the industry that they operate in, and to learn more about it. And I have with me the usual suspect, Sharad Tupran. Hey Sharad, how's it going, man?
It's going very good, and like you said about different kind of guests we've had, and we've covered like a very wide set of skill sets in our podcast, which is very exciting because I've learned a lot in this season.
Oh yeah, absolutely. From structured credit to lawyers to fintech, yeah, it's a plethora of things that kind of go through Long Shots. So it's been a pretty exciting ride, and well, news-wise. It's been a pretty exciting week. Unfortunately, not much we can comment on. I mean, about new union territories being forged out. But yeah, the news flow is right up it. Markets are also reacting heavily.
Yeah.
And I'm sure even if we ask our guest, he'll have some, strong opinions on one side or the other. But let's not put him on the spot. Let's stick to the domain we have. So I would like to welcome Parikshit from StashFin. Hey Parikshit, how's it going, man?
Thanks, guys. Thank you for having me. Pleasure doing this.
Thank you so much. And well, Parikshit, we'll start pretty much from the start.
Yeah.
And before we go into the conversation, friendly reminder to all our listeners, do subscribe to our channel, search for Long Shots. We are streaming on iTunes, Google Podcasts, Deezer, Stitcher, you name it. So do subscribe to our channel so that you get the nice little notification every time an episode goes live. With that, set of housekeeping behind us, officially welcome Parikshit, and we will start with the StashFin. You've been associated with it for I think more than 3 years. Yeah. You're the co-founder there. You are leading technology and product. StashFin, I think simplistically from the website, the most dominant thing that I saw was that it has a credit line card. Mm-hmm. But before we go into the product and the business, would like to obviously know a bit more about you. What's your journey been so far? How did you end up where you are?
Sure. First of all, thanks for having me, guys. As I was mentioning earlier, really glad that you guys are building this podcast platform. Personally, I've been a big fan of following podcasts that are very popular overseas. Tim Ferriss, Joe Rogan, and so on. So I've actually been waiting for something of this sort to come to India. Glad you guys are doing it, and super honored to be a part of it.
We aspire to one day pull a Joe Rogan for 2 hours.
3 hours. 3-hour episode. That's the dream.
We'll not keep you for that long though today.
Yeah, that'll be fun. I'll listen for sure. So by way of background, I actually grew up in India. My dad was in the army. He's an oncologist. So grew up traveling the country. Went to a bunch of different schools for all the right reasons. Post school, I actually moved to the US to train as a commercial pilot. So I have a Federal Aviation Authority commercial license. Once that happened, I trained pre 9/11. Once 9/11 happened, realized that industry would be sideways for a bit. So I moved to Canada and started working in the tech space in the financial services industry. Worked for RBC, National Bank Financial, Wellington West, where most of my roles were around building derivatives, risk monitoring and reporting platforms. Through that journey, I was able to start my own business. We were doing enterprise mobility. So where we had built a platform very similar to Tableau. Ran that for about 8 years. Most of our customers were in the US. We were selling to Walmart, Mission Foods, essentially Fortune 1000 retail customers. Ran that for 8 years. Was able to exit that to a private equity fund based out of the US. At that point, in 2014, I already moved back to India. Reconnected with Tushar, who's the other co-founder for StashFin, and then we had this idea. And then for the past 3 years, I've been involved with StashFin. My role here is to lead the tech build-out, and I also oversee the data science and the product piece.
That's very interesting, exciting stuff. Yeah, sorry, you were saying.
No, I was just wondering, just for the benefit of the listeners, what's basically the offering of StashFin?
So what we offer to our customers is a credit line card, as you correctly pointed out. It's an open loop card that can be used as at an ATM, free of cost, any ATM across the country. Any point of sale, you can buy something on Amazon, you can load that to a Paytm wallet. That is funded through a line of credit that we offer to our borrowers. That line of credit is, the borrowers have the ability to withdraw any part of it that they want. They also have the flexibility to choose the tenor of that line of credit. So they can withdraw 50,000 rupees for a year or 500 rupees for 3 months. They have complete flexibility in doing that. Once they make that pull, it's a completely open loop card. They can deploy it anywhere. The card has absolutely no annual fee. There is no late payment fee. We'll withdraw the money out of the account. There's no bounce charges as long as you have money in the account.
Right.
So it's basically a completely honest product for the customer. There are no hidden charges, no fees, and a lot of flexibility that they can essentially use it any way that they want.
So I imagine you're not underwriting the credit, right? You must be having banking and financial institutions as partners.
No, we do underwrite all of the risk.
Okay.
And we do work with other financial institutions that will participate in the risk as well. But we are a blend of balance sheet as well as off book.
But are you like registered as an NBFC? Is that how it works?
We are an NBFC and a tech platform both.
Right.
So the NBFC part of the business will underwrite the risk.
And I mean, why, in terms of this particular use case, what did you see in it? Like, how did it actually evolve from day one?
Sure. So this actually comes from a personal experience. I mean, when I moved back from India, and it was similar with Tushar, my other co-founder, we had a hard time getting a credit card because although we came from living for many years in the West, decently well-paying jobs. The banking system in India saw us as new to credit, so we weren't able to get any form of credit cards or even a basic credit card.
Right.
On the other side of the spectrum, the credit cards that I was using in Canada kind of continued to believe that I was working within the banking system in Canada, so that to this day continues to work. So we felt that there was an opportunity to create something where we can cater to the segment of risk that is underserved by the banking segment. That's where the genesis of the product essentially came from.
But I imagine there must be some sort of a cap, right, on the line of credit that comes through the card.
Yeah,
not at the risk of going into too much detail about it. I'm kind of cognizant of that.
Sure.
But in terms of what kind of ticket size do you look at, like what kind of user base do you focus on? Because that kind of goes together, right?
Absolutely. We focus on the salaried segment only, and then within that segment, the line of credit the limits will range, between say 10,000 rupees all the way up to 3 lakhs.
Okay.
We don't really compete in the above 3 lakh segment because I think that's price sensitive, and that's where banks and larger financial institutions are more competitive.
Right.
So we remain within that segment, and within that segment, obviously the borrower has the flexibility. Even out of a 3 lakh line of credit, they can only withdraw 500 rupees if they want. And that as well they can choose to repay.
And in terms of flexibility of tenure, are there any constraints on it? Is there any framework on it on top of that, or
that's down to the individual's risk assessment. But at the end of the day, whatever line you're assessed for, any portion of that will be pay as you go. You can take,
because when I was like when I obviously just saw the site. On the site, obviously you have the credit line card as the primary focus. But when I scroll to the bottom, you also are offering like home renovation loans, debt consolidation, all those kind of more, I would say, bespoke quote unquote products were also there. So is like the card like a vehicle through which everything kind of operates?
That's exactly right. So the idea is that the customer has this card that they can use for any of those use cases possible. Right. They have the ability to withdraw cash from an ATM. That opens up a plethora of use cases which were previously unfinanceable. So you couldn't really, go to. So home repairs is a great example. You can't. There's no way that you can walk into a cement shop in this country and try and pay that on EMIs. Whereas that's actually pretty pertinent use case for the segment that we're in. Medical exigencies. That's not something that's very easily financeable. Our borrowers get the flexibility to do that. You have someone unwell, by the time you melt your jewelry or break your fixed deposit, we have the facility to actually cover that cost, which was traditionally unfinanceable. Here you can just support.
So it becomes a flexible vehicle.
Exactly.
Parikshit, like in terms of like we all know from a business model perspective, the journey to being just an intermediary or a platform, getting lenders on board and meeting their investment requirement to becoming a full-fledged underwriter. There are various steps that must have gone in between it, right? So how did it start? Like was being an underwriter something that was a focus on day one, or that is something after market validation you realize that that's something that you want to get in? Because that's where, from a business model perspective, that's where things start getting interesting, right?
Absolutely. For us, it was actually very clear from day one that we wanted to make sure that we participate in risk. For sure. We kind of spearhead the underwriting process. We are the ones who assess the risk. And then we work with other co-lending partners to make sure that our models actually apply to the traditional lending parameters. What we didn't want to build out was, just to try and start and build a business that said, someone wearing a white shirt on a Wednesday is a better borrower than a blue shirt.
Yeah.
I think that type of model may get built, but might take 500 years to prove out. So our thesis was that underwriting will have to happen on fairly traditional parameters, which is fraud, intent, and ability to pay. At the end of the day, debt burden ratio, can the person really afford the loan that they're taking? And to actually make an accurate assessment of that, you need to be able to participate in the risk. So being an NBFC and making sure that we're taking on some balance sheet risk was a part of the strategy from day one.
And sort of your typical retail clients, let's call them, within that sub 3 lakh bracket, how do they think they discover you? Is it just marketing efforts on your side? Are there other avenues in which they're discovering you? What has been the pull for you guys, which has been most effective?
So we're in terms of origination, we're both online and offline. So we're in the typical, your Google, Facebook, LinkedIn. We originate through those sources. We also originate direct to companies. So we'll actually have an event at say a company where our reps will essentially go out and give out the card to people. So those are broadly two large ways in which we're also trying to build out API driven partnerships where we'll source customers from those sources. So that's a growing part of our business as well. So these are broadly, I guess, how we originate customers.
It's very interesting that you mentioned that it's important for the player to participate in the risk taking process to understand credit, and you kind of alluded to credit at the end of the day being a fairly traditional process, right? And I mean, we keep on internally discussing the role of big data or alternate data in terms of pricing risk. But if you talk to like a traditional banker, that person will always say the best way to price risk is to start doing it and get experience, and with that experience data you just refine your models and take it forward. What's your view on the buzz about alternate data that kind of is taking the fintech world? I mean, I think it took the fintech world by storm 3 to 4 years ago. Now it has kind of, I think things have calmed down from that perspective. But what's your thesis?
So, we, that absolutely all of the machine learning and the variable identification and big data is a very important part of our process. We, in fact, invest a lot in that infrastructure. We're probably our largest headcount and expense is our technology and data science team. The idea being that we believe that, you use all those data sources and you build these models to identify what is the right customer to spend the traditional underwriting dollars on. Because the traditional underwriting dollars are going to be they're going to involve costs, bureau pulls, maybe visiting the person at their home and office and physically verifying them. We do full KYC on all our customers. So if we get 100 borrowers on the platform, that'd be an expensive proposition to try and underwrite all those 100 in that spectrum of rigor. What we will do is we'll essentially use all of our AI and ML models upfront to try and weed out all instances of fraud, all instances of where borrowers, maybe there's an issue of adverse selection, maybe the guy's not willing to give us the information that we need to underwrite. So we'll use that for prioritization. We'll use that stuff for operational technology. We'll use that stuff for optimizing a call center. But all that said, at the end of the day, what we're trying to arrive at is, who is that customer that actually deserves our time and attention at this point in time?
It's more of a screening tool for you.
More of a screening
rather than a pricing tool only.
Well, so in terms of pricing the risk, we'll again use models to figure out what segment of risk that customer belongs to, using a host of lookalike models and multiple models that we run. But at the end of the day, the pure credit decision of whether to lend or not to lend is made on fairly traditional parameters. Pricing is, if we do decide to lend, pricing of course will go through a bunch of models where we look at what is their propensity to churn, how many other trade lines do they have, a host of other features, which will come back and result in a decision.
But it's interesting because like when you mentioned like 3 lakh salary class, that's a big segment, and like you started by saying that it was underserved. Why is that, and what do you think is the biggest constraint structurally in the market?
So I think of a typical customer of ours who's essentially probably a call center employee, makes 20, 25 grand, 30 grand a month, 25, 27, 28-year-old consumer. Now this person doesn't have the time to take a day off, go to a bank. Even if he does take that day off and go to a bank, the branch manager isn't going to stand up and welcome him and offer him a tea. So for these guys, it's actually a pretty onerous process to interact with traditional financial institutions and get the services that they need. That's on one side. And secondly, that generation, the expectation is that everything should be available on their devices. So, one, that the institution may not actually service them. And second is that they're expecting a use case and a workflow that's actually entirely different. So that we believe is what creates an opportunity where I think the larger banks are kind of not able to service that segment. Now, if you go 2-3 levels up in income, that's an entirely different experience. That's where you walk into a bank, you don't have to go. You'll be solicited. They'll basically welcome you in. They'll offer you a host of products, which doesn't happen in the segment that we operate in.
Are you seeing sort of this retail borrowers on one side in terms of sort of little mom and shop merchants and businesses like that? Do you see this tool as sort of working capital financing as well? Is that sort of a use case as well that you're seeing?
Well, at this point in our journey, we've chosen to remain in the salaried segment. The broad reason being that all of the models that we run, we are able to identify a set of data sources that help us build those models and build underwriting systems for those segments. In the SME side, we haven't found data sources that we believe can give us that strength of models yet. Maybe sometime down in the future we can think about that, but as of now we're in the salaried segment.
And how do you look at the regulator in this entire mix? Because I recall like a few years back, obviously peer-to-peer was a new concept which came in the Indian market, and the regulator looked at it with a fair bit of skepticism, I think, looking at the Chinese experience. And very quickly there was a differentiation which was made between intermediaries and underwriters. And I think now most intermediaries also end up getting into the NBFC route one way or the other. Would you, and I know this is something that you can agree not to answer, but in terms of regulatory consultation with the wider industry of stakeholders, what's your view on things, in the sense that I'm sure there are a lot of I would say management time that goes into interacting with the regulator, and I'm pretty sure that you must be involved in a lot of them for your company. But are they conducive to a lot of the stakeholder comments that come in? Do you see that getting reflected into policy? Because I often feel that a lot of the policy is written by generalist bureaucrats, and they might not be the most equipped to understand the nuances of fintech or lending or credit at such a granular level.
But surprisingly,
we are getting onto the regulator bashing part of our podcast.
We've done that a fair bit.
So I know we can do that, but
but surprisingly, what we've seen is we've as a company being involved with DLAI, meetings with Niti Aayog. So the intent of actually listening to the industry surprisingly is there. The kind of conversations that we've been involved with on the Niti Aayog side is actually encouraging to see that the regulators at least willing to listen. When it comes down to policy, I think these things are always an evolution. Obviously Aadhaar going away was a setback, but the force of technological innovation that's happening in general is going to lead to a situation where they kind of have to build conducive regulation. Now, question is how long is that going to take, and what's the industry going to do in the meanwhile? I think, if you look across the world, even in the West, it's a similar situation with, say, self-driving cars. There is regulatory pushback, but at some point in time, you inherently know that's a better model to go to anyways. So I think the same thing's going to happen in India over a period of time. Boils down to how long that's going to take.
Do you look at concepts like regulatory sandbox, like the way you have in the UK, where the regulator doesn't put a hard and fast rule in stone, but gives a 6 to 12 month phasing window to companies? We have heard a lot of noise about it in mainstream media in India as well. I think there was a consultation which came in. Do you think that is something which may happen, or or are you kind of cynical about it, that there's a lot of talk, but that might actually not channelize? Because we often feel that when you look at, like, obviously let's forget credit for a moment. If you look at like crypto, the regulator did approach it with a very heavy-handed manner, right? And regulatory sandbox is a complete antithesis to that idea. So what's your take on that?
Again, in all the interactions that we've been in, I think there, in general, the intent around fintech and financial inclusion and expanding the role of financial services in the economy seems to be very conducive. I think the regulatory sandbox specifically is a great idea, but again, getting it from a regulatory standpoint to get actually implementing it, who's going to be the people in the fintech industry who are going to be allowed access to it? Are you going to license it, yes or no? These are some of the details that unfortunately in our bureaucratic system are going to take time. So I think it's all a function of time, because the intent seems positive, and it has to be. There's no other way. if you look at the underserved numbers in population, there's no way the banking system can actually approach all of that. So you are going to need alternative players to come in and fill that gap. I think they understand that. But unfortunately, what ends up happening is we kind of all coming from a bit of a tech background where the concept of time and space is a little different.
But do you feel that those things get lost in translation, like in terms of when you're talking to the regulator, like does it often dawn upon that, okay, there should be more technocrats amongst you who can actually even understand what we are talking about? Because I mean, full disclosure, my father himself is a civil servant.
Yeah.
So I've come from a family of civil servants, but I do understand that, most civil servants, they have a great opportunity in our country to head very technical domains, even though they don't really necessarily have that kind of technical expertise. Right. I mean, even our RBI governor got accused of that in between. So, but do you feel that like the US style bureaucracy where, I mean, I know I'm going totally off trajectory from our initial agenda, but since we are in that thread, I might as well get a comment from you. But do you feel there's that typical American model where you can have specialists dealing with the industry? There's a space for that here as well.
No, I mean there certainly is. But again, being, and I encourage you guys to participate in some of that stuff. Being involved with the quality of conversation that Niti Aayog, man, that's like bureaucratic with a capital B, right?
Yes.
Those guys, it's very engaging conversations. They're listening. They seem to have a very educated point of view on what's happening. So some of that is already happening.
Okay.
It boils down to really a function of time. We expect something to happen in a quarter or two. That's probably the pace to which we're used to, just being in the tech space.
Right.
But that's just not a time frame that those guys work with. For them, a year here or there is probably okay. For us, it's not. So that's really what we're going to struggle with. But I think in time, these things, I mean, some type of alternative to KYC. There's talks of video KYC, for example.
Yeah.
Is that going to be online next month? Probably not. But is that never going to be online? Probably not as well.
So in terms of idea generation, you find it very progressive.
Yeah,
it's more a question of
it's more a question of when, and now with the new mandate, I guess they'll have more of a free hand to do stuff. So hoping pace picks up.
So if you talked a little bit about, before we got online, you talked a little bit about your previous company and that you had an exit. So I just wanted to sort of, because you did that in the West and this is a company that you're building up in India, I just wanted to talk about any parallels, especially from a VC standpoint, I guess. How do you see the VC ecosystem in India? I don't even know whether you interface with them, but general environment about financing a young startup, like do you see what kind of parallels can you draw?
So, I can talk about just building a business in general, because, that was a bootstrapped business that I was able to exit, so didn't have too many VC interactions there all the way in the end, which is also a private equity fund. But I think, I kind of built that business and was able to exit that. That took me about 8 years to do. Just the scale at which you can do things and in the time frame that you can do things in India is phenomenal. I mean, what we did there in 8 years versus what we've been able to do here in 3, the kind of growth that we've been able to pull off here is entirely different. I think that's very encouraging for the general startup ecosystem in this country.
Does it just come down to growth in consumer spending? Is that the biggest driver, you would say?
Well, that's one factor. Your ability to build teams here is a lot better than what you could do in the West.
In what way? Sorry.
So, for example, in our business here, we built this 10-point grading system where we have everyone from the security guard right up to the CEO kind of graded like that. We've been able to pull off a 50%, close to 50% gender equality in the business, which is, for us, it was one of our key values that we wanted to have that. We've been able to grow talent from within. We have 24, 25-year-olds in positions, doing stuff that you can't really imagine that these guys would be able to pull it off. We've been able to build a system where we don't really care, what family you grew up in, what your dad did, what school you went to, whether you speak English or not. And these are the people that have actually helped us build a business from the ground up and to get it to the scale. So these are the kind of things that I think in the West are a little difficult to do.
I see a lot of Canadian values in your current company, though.
Yeah, I mean, all three of us, we believe both Tushar and Shruti also worked in the West for a long time, and these were some things that were actually close to us. And then generally, the availability of the market, as you said, in general, the growth of the economy, growth in consumer spending, that has obviously aided our journey. But to be able to build a business the way you want it, just the economy is more conducive to that.
How big is your team right now?
We're about 200 people.
Okay, so that's a fairly big team.
Fairly large team. And gender equality, promoting people from within, making sure that we actually build. We don't really just talk about a meritocracy; we actually build it.
Yeah.
And we have examples to show for it. So these are things that I believe we could have only done in India, which was hard to do in the West.
In your 200-member team, what's the biggest bucket?
Probably tech and data science.
Right.
Probably 60 odd people in tech and data science.
What about customer service?
So customer service also we do. We've now transitioned to a chat-based customer support. So that's probably a 30-person team in-house, and then we have a additional call center that's running customer support for us as well.
Right. So you're also trying to automate the customer service part.
Great example of places that we use a lot of AI, and so we built a chatbot in-house which kind of addresses our top concerns. So that's an example where we use a lot of technology to automate that process and kind of reduce our operational expense.
Right. Yeah, and so this is just a question which is coming from my own curiosity, and we spoke to a fintech gentleman who runs Squirrel, Saman Sikka, and I think we were talking about it, and we had a pretty interesting discussion, and I've had this conversation, and Nikhil as well, with many people on how they view content in terms of their business. There are a lot of businesses who are not in the content business per se. They're either in lending or tech or whatnot, but content is a piece there which they understand. How do you see sort of financial content? Is that adjacent to what you drive? Because you're in the credit underwriting technology business. That's sort of the core bread and butter. But how does overall content ecosystem sit alongside? Do you have a view on that?
I think in general, basic financial education is one of the things that India is a little behind on. And I think all of us in the space hold a little bit of responsibility to kind of build up on that. We kind of explored this concept of a StashFin university, which will be a set of content in the app where you learn what a CIBIL score, for example, means. What happens if it's good versus bad? Why is it important for you to repay your EMIs on time? What does it entail for you to get a better rate versus a not so good rate? So these are some of the things that we are working on inherently. But there is a gap, and I think kind of industry wide, we should all kind of put a foot forward and make sure that's because growing up in school, I'm sure none of us had a class on what compound interest means or.
It's funny you say that because Nikhil and I we've actually we also saw this exact same problem of lack of sort of emphasis on financial literacy, basic things like compounding and time value of money and things like that. So we actually have given a few talks in Delhi schools and universities exactly to that point. So even so I think we're on the same page on that front, that there is a missing piece in curriculum. And in the Western education system, I saw people much more capable or much more in tune with understanding basic concepts of money management. So that's definitely I think we're on the same page.
But I mean, you look at it as one is that it's a nice to do thing, but one is that you're looking at it as a like a user or client customer acquisition channel as well, like as a way to differentiate your product. Because I guess when it comes to, fintech products by definition become commoditized pretty quickly, right? So to kind of stand out, you need to, I guess, appeal to a brand which resonates with your users persona. Do you see content's role there as well, or maybe it's too early to say?
Well, I think not so much from a customer origination standpoint, but certainly from a customer curation standpoint. Once a customer's on board, just having that set of resources available for them to understand, how to use the product. Because I think as a society, this generation is kind of, shifting from like an asset-oriented, mental framework to more of an experience-oriented mental framework. So these guys are, saying that, it's obviously okay to borrow money for a vacation, but do you have, that framework in your mind on, can you budget for it? What is that EMI going to mean? So just having that resource for an already onboarded customer to better understand it, I think that helps the business.
But do you see that a lot, like travel loans and like that kind of experiential
iPhone loans
borrowing going on in your own within your own customer journey?
So for us, we promote an open-ended use case that it's a card product, you can use it anywhere you want.
Right.
We do see a fair bit of opportunity cost financing, where we'll see if summer is coming, we'll see like in March or April, people buying tickets on IRCTC. So family of 8 or 10 traveling, they'll use the card to take a 25,000 rupee loan and buy a bunch of tickets. We do see a fair bit of that happening. We're able to track use case, so we do see that happen.
But you don't like so when you're agnostic on the uses of funds, is that the point?
Exactly. We're agnostic. We allow the borrower the flexibility to use the funds as they choose.
Right.
Of course, there are models in place that we see a risk in certain type of spending, we will kind of cut the line at that point of time.
Right.
But by and large, we kind of let the borrower make the decision. They have the flexibility to spend the money as they choose.
I mean, this pretty much seems like a big data play, right?
Mm-hmm.
I mean, you kind of, it's an open architecture product, but you are getting good visibility in terms of consumption, how it's going on. So what's the like long-term vision here, in terms of how data will kind of play a major role here in terms of growing StashFin to the next level?
Sure.
That's pretty much centrally, I think, your place also within the company, right?
Yeah. So I mean, right now, within the lending business itself, I think there's a lot of wood to chop for us. We have to kind of grow this business to a larger degree of scale that we're working on. As you mentioned, we're directly integrated in both the Visa. So we have both a Visa and a MasterCard. We're integrated in both those switches directly. So we have the ability to consume those transaction streams.
Mm-hmm.
So that's one of the items that we're currently working on to actually model that in and kind of build a customer-centric experience in terms of how they spend their money, what can we offer them in terms of rewards and incentive programs to say, hey, you seem to be a guy who spends a lot of money buying metro passes.
Right.
So can I build a customized rewards program for you to kind of promote that type of use case?
Right.
So those are some of the things that we're working on.
So like vendor tie-ups, loyalty programs, all those things are pretty much on the agenda, right?
Essentially, yeah. So build this into like a card platform that's very consumer centric.
What's your view on, I'll just kind of throw the name there. What's your view on the company, which was that Cred, right? You must be knowing about it, right? They had a big front cover
on
black ad on Economic Times. Like, okay, 1 CR has been spent today. So, they kind of are, they're looking at it from a different standpoint, right? They're looking at credit card users. But it's pretty much like a card is the center of their entire use case, and they're looking at, I think, probably a different segment from you guys in terms of target audience. And I guess loyalty programs, rewards is also something which is part of the...
Yeah. I personally feel that they built a great business. Probably anytime you kind of talk about use cases, that name comes up very often. So certainly built a great business. And, specifically on that, it's great to look at your business from that, standpoint. So us, we at this point do about 1,000 credit transactions a day, roughly, right? So in the course of this discussion, the machine were done 100 already.
Right.
So we do look at it that way. It's actually an interesting way to kind of measure where you were and where you are and where you have to go. But yeah, as a platform, I think they've done a great job. And just the segment that we are in, that segment is very card centric. So in fact, forget that, even in our segment, if you go out with your friends, it's still a very common discussion to have in terms of what type of card you have and what loyalty program. So that's actually a very common thing to do. So optimizing for that use case, I think, is a smart play. And that's why we actually chose the card form factor, because everyone wants it.
But I guess the difference is that you are underwriting and you have your own card, whereas I think in a company like Cred,
they're a payments platform.
I guess piggybacking on the existing card ecosystem, right?
Absolutely.
I have a Bank of Montreal card which is sitting with me. Like you said, Canadian experience. So that card still assumes that I'm...
So newsflash, there's a Canada connection here. So I'm sure that nostalgia is going to creep in.
Yeah. But over and above, like, whom do you see as, again, this is a question that you might want to answer or not, depending on you're comfortable, but what are some near comps that you see, and may not be Indian players, but companies even that you don't see as comps, but probably aspire to, be there. So what are some of the names out there in the fintech community?
Sure. So there's a company called Nubank in Brazil. So our model is very, very similar to that. Their product, platform, branding, the way the user experience kind of translates. That's something that we actually look at building. So this is multifaceted answer to that. So that's on the product side. Within the organization, we've actually, as I was talking about earlier, we built this model of a product manager program that is very akin to what a Google or Netflix do. In fact, it's modeled exactly around the Google APM program. So that's in talent acquisition and talent retention. So that's something that we would aspire to do. So those are kind of some ways that we think about it.
In terms of overall, we keep on hearing a lot about NBFC space at large, right? There's a liquidity crunch, quote unquote. Some of that is, I guess, fundamental. Some of that is panic driven. Post ILNFS, I think a lot of the debt mutual funds are kind of retrenching. So as to say, how much of it that you see is on a case by case basis, or do you think there's also something structurally off going in the NBFC domain? And is there any stress that you as an organization are also kind of, wary of.
So yeah, I mean, I think a few months ago it was almost like a Lehman-esque situation in the market.
I think that was just a Bloomberg headline. That guy wrote India's Lehman moment, and I think that picked up.
So I mean, news and media and certainly made it feel so. So yeah, I mean, there's certainly there is a liquidity crunch. People aren't lending at the same rates that they at same quantums as they used to. What's gonna it's happened in the tech bubble in 2000, again during the financial crisis in 2008. I think what's gonna happen towards the end of this is that we'll gain something for the better. I think there is going to be a focus towards quality, which it should be. And that's the kind of stuff that we're seeing. Since we are underwriting risk ourselves and we kind of share it with other partners, so we've actually seen an improvement in our situation because of that. Because we're actually doing loan by loan underwriting with partners. So the clear differentiation in terms of quality kind of comes across, and I think that at some point is going to happen to the industry as large. Now, whether that's 1 quarter, 2 quarters away, I don't know, but seems to be. At least for a couple of quarters, we're going to continue to see this.
So there were loose standards, you mean, in the market at large?
I mean,
without naming names, but like in terms of overall, you think that there was a room for correction in any case?
I mean, certainly, I don't know the specifics of who underwrote what and how that blew up, but in general, if the liquidity crunch happens and some loans went bad, they were bad loans for some reason, right? So clearly, there was some issues, but as a result of those issues, we'll start to see a deep focus towards quality, which we are seeing in our segment.
Right.
Some players may or may not make it. Others will, but going forward, I think as the situation improves, it's going to be a larger focus on quality, which has happened in every other market in the world.
Right.
So I think it's cyclical; it will come and go. But as the end of it, we'll kind of have a market that's very better focused on quality than it was earlier.
Any thoughts on the budget? I think the budget had some words on the NBFC space, some government guarantee, quote unquote, coming in. You think that was a band-aid kind of solution, or it's something which is kind of significant in scale?
Again, we have to see the results of that.
Right.
There's some mixed signals in the budget there in the payment space. So I don't really have a lot of clarity on that at all. But I don't think as of now we see any systemic measures that have come in to translate that statement into actions. It hasn't happened.
Well, the systemic measure came on Monday. So anyways, I won't go into that.
What was it? Oh.
Anyways.
So in terms of, StashFin and trajectory, let's call it you have X number of user base or user base of X. Is that sort of the plan, like near term, medium term, to sort of take it to 2X, take it to 5X, take it to 10X? Is the focus entirely on growing the loan book and growing the customer base and then sort of take it from there? Is that the core focus as of now?
As of now, it is. Right now we're focusing on kind of scaling the lending business as is. Over time, we will evolve into a set of products that are a more holistic approach to the customer's financial needs.
Okay.
But that's in time to come. Right now, I think there's a lot of wood to chop within what we're doing. In the near term, that's going to be the focus.
I mean, you're a product and technology person, right? And products are they're notorious in terms of from the planning stage to actually getting deployed. I mean, there's always I think 8 to 12 months of serious hard work which goes into it, right? From a product standpoint, and you obviously mentioned that you were able to do a lot of things quicker here, which probably in the West wouldn't have been possible.
Exactly.
And product is all about talent acquisition, getting the right people, making them do something that resonates with their own abilities. So in terms of getting that talent pool within StashFin, was it an easy ride? I mean, I'm kind of wondering that it's always, I mean, there are a lot of people who look at technology in our country, but finding those with the correct skill set and experience that might have been
fit.
I mean, that's actually that's actually having done this previously, that was something that I was kind of looking forward to doing all over again in the consumer space, because my previous business was more B2B. The challenge in this country is not really, I mean, you can acquire talent. Everyone, you're going to talk to people who have a certain degree of experience in certain platforms. It boils down to, as you said, getting them to function at the best of their abilities and giving them a role that they're actually going to be able to deliver it. I think that's where we've been able to do a good job. Boils down to building this culture where it's a meritocracy. It doesn't matter whether you speak English or not. I will personally guide you in terms of making sure that what you're building, if you're challenged from that standpoint, we'll have someone that will help out on a user interface standpoint. That guy who's helping on the user interface standpoint may be challenged from a coding standpoint. So we'll find this way of getting the team to work together. I draw a lot of that from my experience growing up in a military environment where the whole environment was built on teamwork to the nth degree. You're depending on someone for your life. So kind of building that culture in-house, which is why 6 to 8 months we've launched products in 5-7 days at times. And this is conference call, idea, app build, live on the app store, production, loans getting made out.
Right.
Wow, that's interesting.
Yeah, and it boils down to just having that kind of team. And if you look at and talk to our tech team, these guys, they're great at what they do, but by no means will it look like you're not going to find like a long-haired developer sitting in shorts. We don't have any of that. But yeah, it's actually that piece has actually worked out very well for us, which is structured exactly around that Google Associate Product Manager program. That give them responsibility, give them the tools to do it, have faith in them, and then they'll deliver back.
And so you're predominantly focused on the app ecosystem, or what are the other kind of tech channels that you go through?
So on the acquisition side, we're on the mobile web, we're on the app. We have a set of SDKs and APIs that other partners can also integrate with. So that's becoming a large part of our business.
Sorry, how does that work? I mean.
If you're on I'm just using an example. If you're on a e-commerce site and you're doing a checkout, we could be positioned right there on the IRCTC website. We could be positioned right there, and that would be an API driven
pay via StashFin,
something else, right? So that's a large part. But we've actually built a lot of operational technology. So the origination systems are one part. The loan management system, the underwriting system, the data warehousing system, loan processing, collections. Essentially, when we think of you've worked in banking before, think about building the asset side of a bank, the technology of the asset side of a bank. That's something that we've been able to do in-house in about 12 to 18 months. So it's a full stack piece of technology that services the business end to end. We don't have any third-party solutions. Everything has been built from the ground up in-house. And that's a decision that we made early to kind of make sure that, because that to us is a competitive edge. Right. That we have the agility that we want. We built a system to maybe an 80% use case. As we learn more, we'll keep perfecting it. If you were doing that because doing that in a vendor relationship was my previous business. So I understand the challenges of that very closely. So we decided to build the whole platform. So every single piece of technology, right down to reporting, dashboards, everything you see in the office, has all been built in-house.
And in terms of if you look at things like collections, right, which is always like a bit of were there any product interventions that you guys did to kind of make that process more streamlined, easier, put nudges for customers, for example? Were those also things on the agenda when you were building it?
Absolutely. So all of our collection technology has also been built in-house. That's another example where we'll use a lot of modeling. So we'll try and figure out, what is the best, what's the So you can't send a text message 3 times a day to every customer. That's just not... That's not good customer experience. There are some customers who will always pay on the 11th hour, but it's in time, but they'll always pay at that time. So you don't bombard that guy with messages. So that's an area where we'll use a lot of our modeling to identify which customers have to be messaged in what way and what's an optimal outcome out of that. We'll use a host of that. We built, there's a specific collections app that we built. So our agents that actually go to someone's house if someone says, hey, come to my house and pick up a check. There's a specific app that they have with turn directions, the ability to issue a receipt right at the customer's doorstep. So all that technology we built on the collection side.
It's interesting, right? Weren't we discussing that with Mayank, right? So we had Mayank Kachwaha from India Lens. So I think we were discussing with him that was an M-Pesa use case in Africa or something, where you look at mobile top-up frequencies. Some people top up immediately, some people top up till the end, and that obviously affects behavior. So it's pretty interesting that to see that in function in a different format.
So we'll use a lot of such alternative data sources that are indicative, but the key there is to kind of solve for autocorrelated variables. So if you look at someone who makes a certain degree of income, and they live in a certain neighborhood, that by and large would always correlate. Right. So you have to make a pick on one versus the other. Right. What we do in that case is we'll identify which is the cheaper of the two to find out. Because this business boils down to operational efficiency in terms of cost. So we'll find whatever the cheapest to figure out, and then that kind of becomes the key variable that we'll use for going forward.
Any plans to enter branchless banking, full service?
Too early to tell. Like I said, lots of wood to chop in the lending space, but at
Yeah.
some point we want to expand
Yeah.
our set of services to the consumer.
Right.
Yeah.
So that direction, maybe savings, it could be a direction of the day.
Actually, like in terms of like we kind of briefly touched upon fintech and funding environment. Like I was reading recently that VC funding to the fintech space is now around like in H1 2019 is around 300 million. So it's kind of dropped down by 50%. And I remember when we asked the same question to Mayank, he was of the idea that, it's just the time when most guys are exiting. So, I mean, that exit cycle is kind of hitting its peak. So one shouldn't expect a lot more of new investment. Do you kind of agree with that view, or you have some other take on it?
I mean, not necessarily.
Or is it just a function of environment? Like
I think the environment has a role to play for
Right.
sure. I mean, we've been able to, so far in our journey, we've raised about 13 million in equity,
Right.
90 million in lines of credit and debt and so on and so forth. So for the right business and with the right metrics, I think there's a range of investors that will always be available. The environment does play a factor.
Yeah.
So I think that's maybe a couple of quarters to see how that has an impact.
Yeah.
There have been some large investments in the Indian startup space in general.
Right.
I think that also has an impact to a degree.
Gets ring fence there.
Exactly.
the one-offs, the big numbers, right?
Yeah, exactly.
In terms of technology plays in the lending space at large, where do you see the future heading towards? I mean, as a technology commentator, which I'm sure you are, right, on the side, you observe these products so firsthand. What are the new innovations which probably you have seen already in Western markets, or maybe even on developing markets? I think sometimes we are ahead in terms of mobile-driven innovations and stuff like that. Any things that kind of caught your eye?
I think that, you hit the nail on the head. I think India in general has kind of leapfrogged broadband to mobile. We all know that. We see probably 80% of our use case coming from mobile web combined. So I think that is going to grow. I see specifically in our segment, the role of this concept of API everywhere is kind of going to develop to a fair bit, where consumers are looking for a very seamless experience. If I am on Amazon, I don't want to go to a third-party banking site to do something and come back to Amazon.
Right.
So the role for integrations into these is significantly going to grow. I think we are underplayed in the sort of using video on the operational technology side in our business. I think that's, you started to see that come a little bit. Right. But I think that's going to certainly grow. I think this talk about video KYC, as we talked about earlier, something of that sort is going to come in for sure. I also think the role of big data is kind of just scratching the surface.
Right.
The possibilities are limitless. I mean, in the West, people now have the technology to kind of draw a sketch of a person by looking at their banking transactions, as an example. Right. But in India, we're a little far away from that.
Yeah.
So as that structured data starts to come in, I think we're going to, and the consumers will, there's a side of it that thinks that's too intrusive, which I tend to agree. But there is a larger use case benefit to the consumer that I think,
as long as you're transparent,
that I think the use case benefit to the consumer is going to far outweigh the risk that you see.
Right? Yeah, no, I agree with that. I feel the same way as well. I think it's tech. It's your friend, not your enemy, right? I mean, it's a mindset thing. I'd agree with that.
We attended recently a privacy. It was a kind of a roundtable conference on privacy, like with the new bill coming
and
with Krishna,
and with 5G knocking on the door. So all these things.
So the roundtable started in a very calm and pristine manner, but very quickly, you could see that there are two groups of people at the end of the day. One who kind of take the tech in the right. I won't say the right. I mean, I'm being very judgy there, but kind of taking it in a healthy, holistic manner.
But do you like? So again, trying to draw for autocorrelation there. Yeah. Did you see that any type of commonality in terms of maybe age group or because so what I see is, like, for example, my daughter or my niece, these guys, they're looking at an iPad and they look at a magazine and they'll try and do this. They'll try and flip it. They're like, this doesn't work.
Yeah.
So for them, they're growing up with the screen being the only interface.
Yeah.
Whereas we probably still remember like a rotary phone or whatnot. So do you find that that's probably an aspect?
I mean, strangely, the younger lot seem to be more, I would say, kind of anti-tech, so to say, right?
I have a political view of saying it is. There's a liberal view, which is at times can be rational. There's a conservative view, which can also at times be irrational. But I think it was more not on the basis of age, but it was more on like
Political leaning.
privacy, right? My privacy, my right. But
because I mean, the problem is that I mean, there was a very interesting gentleman who was making the point on there's a difference between ownership and control of data, right?
Yeah,
you need to kind of look at them separately.
Separately,
and then one person, he kind of raised the point that there is a transactional endpoint here. Let's not forget it.
Yeah.
It's something which is like the fact that we are all, even during this conference, the fact that we are all on our phones, texting people. This is an integrated part of our lives.
Yeah.
So I mean, if there's something which makes it a better experience, you just cannot ignore it in the name of data privacy.
Yeah.
But then you always have those the guys with the flag that this is not done.
Yeah, and some of these things, I think it boils down to the understanding of the tech behind it, right? So you look at
And people think that there's actually a guy in a room.
No,
right?
there isn't.
That's
Exactly,
the thing.
exactly my point. This is just the big data models working the way
Yeah.
they're going to work. So if you sometimes you look at an ad on your phone and you're dead sure that the phone is listening to your microphone. That's not what's happening.
Yeah,
that is a predictive big data model on the back, basically saying that you are thinking about a cat at this point in time.
I had these debates, when the entire Aadhaar bill was going on, and I'm fortunate to have a few left-leaning friends as well. I mean, this is kind of pulling their leg on the podcast without naming names. But when they used to kind of, the government is snooping, I'm like, you know what? The government has like terabytes and terabytes of metadata. They don't care about you.
It's not physically possible.
Unless unless there is some investigation is already going on, and there is an exploratory study into you particularly as an individual.
Yeah.
Like, do you think that the Aadhaar data set is like something which is easy to comprehend and make sense of? I'm like, there are companies who just do that for a living, right?
And that's all happening at a macro, trend analytics, predictive modeling level.
Yeah.
It's not down to you're right. I mean, nobody has the time. I mean, if I wish I was that
Even the capacity to kind of
incentive also,
I'm sure like you must be like, you do, even through your product, there must be a lot of data points which are kind of booked in the system.
Yeah.
But then a lot of additional layers of product have to be evolved to actually translate that into actionable insights.
Yeah. So we'll collect north of 2,000 variables through a customer's journey.
Right.
Probably 150 of them removing autocorrelation, removing model errors, whatnot, will be utilized, and that is on a population basis. That's not on a individual. I'm not saying that because you copy pasted a date of birth, you are X or Y. I'm using that as a trend. That fraudsters will copy paste a date of birth. That's what the model tells us.
Right.
At a population level.
Right.
Very hard to kind of say that it's individually against me. But I mean, technology makes it seem like sometimes it's targeted to you. You look at a picture of a vacation that you were talking to your friend on the phone, and you're like, "What
That's so creepy."
I recently saw this very interesting documentary on Netflix called The Great Hack. And it was
the Cambridge Analytica.
Fantastic, yeah. So there were a lot of things from there.
Cool. No, I think that was a brilliant note to end this podcast. Parikshit, thanks a lot for spending your time here. I hope you enjoyed it as much as we did.
No, absolutely. This was great. Thanks for having me, guys. It was a lot of fun. And some interesting tangents we went into.
Oh yeah. Usual diversions. But
today was very structured though. Actually, we spoke a lot. We understand your business, and it was a great chat. Thank you again for your time, and good luck to Team StashFin.
So on that note, we can call it a day, and would obviously welcome all our listeners to obviously subscribe to the channel and put in your comments, especially on this episode. Tell us what we can do better so that we can make it better, for the lack of a better phrase. And have a great rainy day. At least it seems like that in Delhi. And this is Nikhil Arora.
This is Sharad Tupran
signing off.